To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.
Hello people, a warm welcome to you guys. This is the 2018 paper accounting part. Here we are having this paper and doing the fourth chapter, fourth video of this paper. In the first video we took up the first question of the 2018 WP Western Province third term paper. We took up the first question in the first video, third term paper of 2018. And in the second video, we took the second question. Second video, we took the second question, that means the business studies part. And in another video, third one, we took the third and fourth both questions. Now, this is the fourth video, and we are starting this with the fifth question in which part? In part 2 accounting. Right, so this is the video that we start. The accounting part of the 2018 Western Province paper. Paper 2. Fifth question, subpart, Roman number 1. What are the main objectives of accounting? What are the main objectives of accounting? Well, easy question. Objectives of accounting. Main objective. Providing what? Providing goods and services. No. Providing that's right. Providing financial information. Providing financial information required by the interested parties. Well, now, don't we have a name for these interested parties? Don't we have a name, a separate name for these interested parties in a business? Who are these interested parties called? They are called stakeholders. Stakeholders. Providing financial information required by the interested parties or stakeholders for their decision making, This is the main objective. Not preparing accounts, not preparing the books of accounts, not recording transactions. No, nothing. Main objective is this. Main objective. Next question. What is a transaction? What is the transaction? That's what they're asking now, That's what they are asking us. Okay. Okay. In Sinhala, what do you call it? Transaction. Ganudenu. Yeah, that's right. Ganudenu. Okay. It's not wrong. It's correct. In Sinhala, we call transactions by this word. Ganudenu. Okay. But you can't write that in English medium paper. No? So you have to come up with a definition. Ganu denu. Yeah. Okay. Exchanging of resources. That's right. Simple. Exchanging, right? Exchanging. Now it came out nice. Exchanging of resources. With various parties, not with one party, with various parties. Various parties. Yeah, simply that's it. That is what we call a resource exchange. No, that is what we call a transaction. Exchanging of resources with various parties. That is a transaction. Any ganudenu, okay? Any ganudenu, any transaction is an exchange of resources. Exchanging of resources. It can be selling goods. You are providing goods to the customer and taking money. See, exchanging resources. Providing goods to the customer and taking money from him. Exchanging resources. Yeah. Even when purchasing goods, even when paying an electricity bill or rent or whatever, any transaction is an exchange of resources. Yep, that's right. We're going ahead. Yes, we are going ahead. State two differences seen in general journal compared to other primary books. Two differences, Two. In the general journal. Well. That is the primary book, which sometimes we call it the kitchen sink, or sometimes we call it the garbage bin in bookkeeping, the general journal. You don't ask me why I have told you these things. I have told you these things, guys. Why we call it the garbage bin of bookkeeping? Why? Because every transaction or event which cannot be entered in other primary books, all the garbage put into this. Well, actually, they're not garbage. They're not garbage. They're transactions, events. But various types of things which happen that cannot be recorded in specialized journals like cash book, bank account, bank book, purchases journal, sales journal, purchase returns, sales returns, blah 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 blah, petty cash journal. Various transactions which cannot be entered in those specialized journals are entered in this one, the general journal. Yup. So, what is the difference? Main difference? Two differences. That's right. After recording a transaction, After recording a transaction, a narration should be written. A narration. Narration. What is narration? Who asked that question? Did you ask that question, boy? Yes, you, Buddha. Yes, you. What is narration? Really? Are you serious? Are you kidding me? Huh? You can't ask what is a narration. You should know what is a narration by now. Go check the previous lessons. I have done the correction of errors lesson. In that lesson, I have explained this very clearly. Narration should be written. After recording a transaction, narration should be written. In other prime books, this feature is not there. Narrations, no, only in general journal. Okay, another one. Well. Differences seen in general journal compared to other prime books. Have a specific type of a transaction, type of transactions. What am I trying to say now? Other prime books have specific type of transactions to be recorded. Yeah, to be recorded. Understand, children? To be recorded. But in general journal, there is no specific type of a transaction to be recorded. In general journal, no specialized transaction, no specialized transactions. Oh, we can write in general journal. In general journal, see here from here, various types of transactions are recorded. There you go. 2. Can be going. Yes. Now we are going to the next. Write the journal entry related to the purchasing of furniture worth 50,000. But on credit, write the journal entry related to the purchasing of furniture worth of 50,000 on credit. Journal entry. They're asking for the general journal again. Purchasing of furniture worth of 50,000 on credit. Well, if they are asking us to write the journal entry, that is what we should provide them, the journal entry. But when you write journal entries, you should have a general journal. Date column, description or details column. Yeah. Then debit column, credit column. This is the format of a general journal. You know that. Here we go. General journal. Yeah, got it. Date column, description, debit and credit. Yeah, this is the general journal. And we have to write the journal entry for this purchasing of furniture worth of 50,000. Purchasing furniture. We are getting furniture to the business. Assets increase. Furniture account debit. No cash is paid because it is on credit. See, no cash is paid. So no entry for cash. But I'm sorry, but not purchasing. Furniture account debit. Creditors account credit. Furniture debit. Creditor credit. Okay. Furniture account debit. Can you see it now? Oh, can see, right? Furniture account debit. 50,000. Creditors account credit. Creditors account. Now what? Now what? Now the narration. The narration. This one. Somebody asked, hey, what the hell is that? Narration. Now I'm writing the narration. Okay. Now we'll now maybe you will remember. Narration. What is narration? The narration comes underneath every entry in the general journal. Underneath every entry. For each and every entry. For this entry, we can write recording the purchase of purchase of what? Furniture. Purchase of furniture. On credit. Purchase of furniture on credit. Yeah, that's it. You can even mention the amount, the value. If you want, it doesn't matter. It's better. 50,000. There. That is a double entry. And going forward, write the relevant transactions for the following. Write the relevant transactions for the following. Okay. What about this one? Third one. We are moving on to the third one. Substitute the following transactions in the accounting equation. Now, what they mean by substitute? What they mean by substitute? They mean by substitute is that they are expecting us to write the effects of these transactions. Yeah, that's it. Yeah, that's the meaning of substitute. Write the effects of these transactions in the accounting equation. Okay, which means investing 100,000 in the business, that is the first transaction. How it is affecting the accounting equation. What assets increase and what is decreasing. Let's first write the accounting equation right here, so it's easy for us. Assets equals capital plus liabilities, right? Capital plus liabilities. There you go. Assets equals capital plus liabilities. Accounting equation. If you want, you can use equity instead of capital. It doesn't matter. Okay. First one. 1st January. 1st January. 1st January. First invested 100,000 in the business. Okay, 100,000 means money coming into the business. That is an asset. So under assets plus 100,000 plus 100,000 what? Cash. Plus 100,000 cash. Invested 100,000 in the business. Who invested 100,000? Is it you or me? Who's investing money into the business? Owners. Oh yeah. Who else? People who are walking on the road don't come with cash to invest in a business. No. Owners come with their cash and invest it into the business. Owners' money, that is equity. So 100,000 under capital increases equity. Done, and we are going to the next one. Why are you? Yeah. Next one. This one done. This one done. 8th January. This one, 8th January. 8th January, 8th first. Credit purchase of tools worth 50,000. Tools is a business asset again. So just like cash, here tools increase 50,000. Credit purchase of tools worth 50,000. Tools increase 50,000. But it is not invested by the owner, it is purchased. Purchase means either you pay cash and you bring the assets to the business, or you bring the assets to the business without paying cash on credit. This is such a transaction, credit purchase. So cash do not go down under assets, but a liability is created because because now we owe the suppliers of the tools because we didn't pay them. It's liability. Creditors. They are called creditors. Increase to the business. Next one. Next transaction. This one also done. Here we are. Stocks worth of 20,000 sold. Sold. On credit. Sold. At rupees 30,000. Stocks worth of 20,000 sold at rupees 30,000. Stocks go out of the business. It's an asset. So assets decrease 12th January. Assets decrease. Which asset decreases? Stock. Stocks worth of 20,000 sold. 20,000. Stocks decreases. Going down because it's sold. Stocks worth of 20,000 sold at 30,000. Wow, it's a profitable transaction. 30,000 cash come into the business. You know why? Because 30,000 is the value which we have sold the stocks. We have sold the stocks for 30,000. That's a great deal. Because it's a profitable deal. Cash 30,000 coming into the business, so increasing. Okay, now something that you should always remember, if the equation has equal mark here, that means this side should be always equal to this side, isn't it? Now because of this transaction, it's not being equaled. Why not? Why? 20,000 decrease and 30,000 increase. 20 decrease, 30 increase. There's a 10,000 gap in between these two. See? 20,000 decrease, 30,000 increase. 10,000 gap. So either 10,000 should decrease again on this side, but we can't do that. We have recorded very correctly in this side, assets decrease by 20 and increase by 30 cash come into the business. That's why increase. And there is a profit. That profit is a 10,000 profit. You know why? No, I should say you know why. Why? You know why? Why? Because 20,000 worth of stocks were sold for 30,000. 10,000 profit. Profit belongs to the owner. So equity increases. You should add that 10,000 to equity. Add that. Done. That is also done. Can you see this? Yeah, you can see, right? Okay. Can see, right? Next one. Here. 16th January. Paid 30,000 to creditors. Easy. Paid 30,000 to creditors. Cash going out 30. Cash going out 30. So cash is an asset. Asset decreases 30,000 cash. At the same time, the 30,000 was paid to creditors, and the creditors are liabilities. Liabilities decrease 30,000. 30,000 was paid to creditors. Creditors are liabilities. When we pay them, liability decrease. Liability decrease. Creditors. Last one. Received 12,000 from debtors. Received 12,000 from debtors. We're getting cash now. That's a good thing. Everybody's happy when they get cash. Yeah. So cash is increasing here. Cash is increasing here. How much? How much? 12,000 from debtors. Received 12,000. It is on 20th. 12,000 increase because we receive money from our debtors. At the same time, decrease 12,000. Why is that? Because debtors are assets too. When they pay us money, they pay and go. We lose our debtors. So debtors decrease. Okie dokie. First transaction, 1st January, invested 100,000 in the business. That is done here. 100,000 cash increase. 100,000 cash increase. 100,000 capital increase. Yeah. 8th transaction also done. 12th transaction done. Then 16th transaction here. 16th transaction is here. Here. This one. 16th January. And last one, 20th January. See? That's it. Here we go. If you want to look at the transactions, then the equation, now you have it. Next question. Write the relevant transactions for the following. Write the relevant transactions for the following. Okay. Write the relevant transactions for the following. We have to write them in words. Okay. We have 1, 2, 3, 4. We have 4 transactions. There were no personal drawings. There's a note, small note. Let's take the first transaction. 1st, 5th. 1st January 5th. This one. Machine increased, cash. No, equity increased. Under assets. Under assets. This section is asset section, children. This section is asset section. This section is equity section. This section is equity section. And this section is liability section. Yo, yeah, that's right. Liability section. Yeah. Liabilities, we have bank loan and creditors. Let's give these sections colors. This is the liability section, children. This is the liability section. This is the equity section. Where? This is the equity section, children. This is the equity section. There you go. This is the equity section. Now it's clear. And the blue color, left hand side, this entire section is the asset section. Right. It's clear now, right? Isn't it clear now? It's so clear. Yeah, it's easy now. First transaction. First, fifth. Machineries have increased and under equity, there should be capital, children. In this equity side, it should be capital. In the paper also, it's printed as cash, but if it is printed as capital, it's better. Because it's equity now. Under assets, machinery is increased and capital also increased by 200,000. A machine was brought in. A machine was invested. By who? The owner. Invested by the owner. Why do I say the machine was invested by the owner? Because the value of the machine has gone to the capital. See, man, it's under capital. Invested by the owner. So now that value should be under equity. Okay, and under assets also, a machine has increased under assets. Fifth, then 12th, this one. We are writing the transactions, See, write the relevant transactions now. Second, 50,000 stocks increased here and 20,000 cash decreased and 30,000 creditors increased. Oh. What in the world has happened here? Well, I don't know. Well, here we are. Stocks increased. That means a stock has come into the business. 50,000 worth of a stock come into the business. For that, 20,000 cash has been paid out. That's why it's decreasing. And 30,000 creditor increased means out of this 50,000, 20 cash paid, 30 is on credit. A stock worth of 50,000 purchased. Purchased. But you can't stop there, because you have to mention this 20,000 and you have to mention this 30,000 too. The stock was not purchased entirely, paid by cash. The only 20,000 was paid in cash. That's why cash decreased, only 20,000. 20,000 paid in cash. Mm-hmm. 20,000 paid in cash. This one. And 30,000 on credit. 30,000 on credit. Okay, you can see that, right? 30,000 on credit. Okay, that is done. Next, this one, January 18th. January 18th. 30,000 debtors increase, 20,000 stock decrease. Stock decrease means, again, a stock has been sold, but 20,000 of a stock has been sold to debtors for 30,000. That's why debtors have increased. Again, there's an inequality. It is not equal. 20,000 decreased, 30,000 increased. 10,000 difference. Is it here somewhere? Yes, it's here. Yeah, it's here. See, what they have done is they have sold a stock of 20 for 30,000 on credit, and that remaining 10,000 is the profit. It is added to equity. Added to equity. See, plus 10,000 equity. So what can you write? A stock worth 20,000, sold for 30,000. Here it was purchased now. This one is sold for 30,000 on credit. If you want, you can mention this 10,000 profit, but it's not necessary, it's not compulsory. Yeah. This is also done. Now this 25th. 25th, January 25th. Okay. January 25th, this one. 20,000 cash decreased, 20,000 equity decreased. Oh yeah, I'll tell you something. Only 4 events can increase or decrease equity. You know that. Some of you may not know, but most of you know. Only 4 events can increase or decrease. These 2 increases equity, these 2 decreases equity. Okay? Additional capital increases equity. Profits increases equity. Profits or incomes. Then these 2 decreases equity. What are these 2? Drawings decrease equity. Losses decrease equity. Losses means can be expenses too. Okay, these two decrease equity. So here there is a decreasement of equity. There is a decreasement of equity, 20,000, and cash also decreased. It's a loss or an expense. We can take it as an expense. 20,000 rupees, 20,000. Any expense, mention any expense. Rent. You can say rent. You can say insurance. You can say salaries. Salaries of the employees. Employee salaries. Rent, insurance, employee salary, whatever the expense you can come up with, you can mention. 20,000 rent, insurance, salaries paid in cash. Paid in cash. Yeah, it's done. See this one. Paid in cash. Okay, we are done. Hey, children, guys, do you know what? You know what? This is the B part, no? This is the B part of Roman number 3. Yeah, Roman number 3, see? Roman number 3. A part. We did it in the accounting equation. A part. Yeah. And this one is the B part. How many marks? How many marks? 4 marks. That's that. 4 marks only. 4 marks means how many minutes? 8 minutes maximum. Okay. To do this and this. You don't need 8 minutes. You have 5. If you have 5 minutes, you can do it. You can do it in 5 minutes. Last part. Prepare the cash book with relevant discount columns. OMG. For the entire question, with all 4 parts, you get 12 marks. Yeah, that's how it is. You have to prepare the cash book with relevant discount columns, then post the cash book entries to the ledger. That means double entries in the ledger accounts. First, prepare the cash book. Yeah, prepare the cash book. Prepare the cash book. Okay. We'll prepare the cash book. Okay, we'll do it right here. Here we go, cash book. First, a T account. First, a T account. Yo. Date column. Invoice number. Description. Discount and value. Date column. Invoice, receipt number and voucher number. Description. Discount and value. There we go. That is the cash book format. This is the center line. Voila. Yeah, it's easy. It's easy if you remember, of course. Cash book. Date. Name the columns, will you? This is the discount column. This is the amount column, value column. Which discount column is on the debit side? Tell me now. Tell me. Which discount column is in the debit side? Discount allowed or discount received? That's what I'm asking. Allowed. Discount allowed. Okay. Discounts allowed. So in the credit side, discounts received. Discounts received. And value. It's the credit side. Okay, okay. Let's take it from the beginning. 1st January 2017. This one. 1st January 2017. Cash balance as at 70,000. Cash balance rupees 70,000. Cash balance does not have a double entry. Only the balance in the cash book is given here. Cash book balance. It's not a transaction, it's a balance. What we do is we put the date 1st January. We write balance brought forward. In the debit side, because it's a cash balance, positive balance. Assets always have debit balances, asset accounts, debit balances. 70,000. The value column. Balance brought forward. Done. 11th January, received 13,500 from Shalini. The discount deducted 1,500. Received means we are getting cash, money coming into the business. So money in or money increasing in the business, money increasing go to the debit side. 11th. Shalini is the debtor. $13,500 is the value. Received 13,500. Okay, received that from Shalini. Deducted discount is 1,500. Put it to the discount column. Okay, now we have the next part to post the cash book entries to the ledger. We need Shalini's account. Let's draw Shalini's account. Let's do it at once. Let's do it together. It's easy. Yeah, it's easy. Let's draw the T accounts, to put the double entries. At the same time, when we put the entries, we put the double entries too. Which account is this? Whose account that now we need? Shalini's account. Shalini's account. Cash book debit side saying Shalini. For Shalini 13,500. For Shalini from Shalini 13,500 received. 13,500 received. Cash book debit. Shalini's account credit 13,500. And the discount too must be recorded. There we go. 13,500 is the value or the cash value that we received. So description cash. 1500 is the discount. So the description is discount. Allowed. That's how I do it, yeah. That's how we do it. Yeah. Next one. We are done with this. Moving on to this. 18th. 18th January. When settling 10,000 for Rishni, a discount of 10% was received. When settling 10,000. When settling 10,000 means 10,000 is not paid, only after deducting the discount you pay. See, when settling 10,000 for Rishni, a discount of 10% was received. Now, we received 10% discount when settling 10,000. That means from 10,000, this 10% discount must be deducted. 10% out of 10,000 is 1,000. This 1,000 must be subtracted from 10,000, that is remainder 9,000. So we do it, Okay, it's a payment, cash going out, decreasing credit. Value 9,000, discount 1,000. This is the discount. Yeah, discount 1,000. Yeah. Yep. Yeah, all right. To whom did we pay? Rishni. To Rishni. Rishni. We paid to Rishni, this guy. Now we need Rishni's account. Shall we draw Rishni's account here? Rishni's account. Rishni's account. In the cash book credit side, Rishni is payment to Rishni is recorded. Cash book credit side. Rishni's account debit side. 9,000. That is the cash value. 1,000 is the discount value. It's a discount receipt. Done. Don't forget the dates, Put the dates. Next. Last transaction. That is this one. This 25th January. Chama was given 10% discount when settling 20,000. Again, the same type of a transaction. See the way it is given, you can figure it out. Chamal was given 10%. When settling 20,000. We have given, discount allowed to this guy, and he paid us 20. Cash coming into the business. Debit. Cash increasing. But after 10% discount is deducted. 20,000 from 20,000, 10% means 2,000. 20,000 minus 2,000, 18,000. 18,000 received. 18,000 received. 2,000 is the discount. Who is the guy? Who is the guy? Chamal is the guy. Chamal. Yeah, famous name. Chamal. 25th. Now we need Chamal's account. Let's pull it up. Let's get it on. Right, somewhere around here. For Chamal, we need an account because Chamal is a yeah. Chamal's account. This one. Money received from Chamal in the cash book debit side, Chamal's account credit side. 18,000. Cash value. Then 2,000 is the discount value. Discount allowed. Done. That's it. Now what? Now we have drawn the T accounts, the ledgers, and the cash book also. Is it complete now? Is it complete? Is it now? All the ledger accounts done. They have asked us to post the cash book entries prepared to the ledger. Are you sure that all the ledger accounts are done? For the balance brought forward, there is no double entry. It's the balance now. Balance coming from last month brought forward to this month. Shalini's entry was recorded in her ledger. Chamal's entry was recorded in his ledger. Rishni's was also recorded. I'll tell you something that you always forget. I'll tell you something. You always forget the discount accounts. There should be two separate accounts for discounts. Definitely, you should draw the discount accounts. That's what you should remember. For discount allowed, separate account, and for discount received, a separate account. Before that, let's balance the cash book, shall we? Let's balance the cash book. Okay, let's take the higher, greater total, the addition. Which side has the greater addition? Which side? I don't know. The debit side, obviously the debit side, right? Yeah. Value column only has now one value, 9,000 only on the credit side. On the debit side, 70,000, 13,500, 83,500 plus 18,000. 70,000 plus 13,000, 70 plus 13,000, 83,000. 83,000 plus 18,000. It's 101, 101,500, right? 101,500. With this 500. Yep, 101,500. I have to mention that on the credit side, 101,500, and from the credit side total, you subtract the credit side total from 101,500. Credit side only has 9,000. When you minus 101,500 from 9,000, no, you subtract 9,000 from 101,500, and it is 92,500. That is the balance carried down. There you go. Done. but let's carry it down. Okay, and you don't balance the discount columns now. Take the discount column total and mention it in the total box. 1000 for discount received and 3500 for discounts allowed. That's it. That's it. Okay. Mention the discounts allowed and the discounts received totals in the relevant accounts. What are the relevant accounts? The discounts allowed account and the discounts received account, of course. Discounts allowed account and the discount received account. The discount allowed account is the discount received account. Yep. Received account. 1000 goes to the discount received account credit side because it's an income. Discount received is an income, considered as an income. So credit side, mention creditors as the description. And 2500. 2500? No, 3500 to the discounts allowed account debit side. 3500 because debit side, why? Because discount allowed is considered as an expense. 3500. Done deal. That's how it goes, and this is how it looks. Shalini's account, that is a debtor's account. See, Shalini. And Chamal's account, that is also a debtor's account. See, Chamal. And Rishni's account, that is also, that is a creditor's account. Rishni's account. Discounts also recorded. See, man. Done. Children, guys, you're not children anymore, right? Guys, this is the 2018 Western Province third term paper. Fifth question. We are in the accounting part, and in the accounting part, this is the first question. I hope to see you again with the sixth question and seventh question, and this paper will be over. This is the 2018 WP Western Province third term paper 2. See you again with the sixth question and the last question, seventh. Until then, have a good time. Bye-bye.
To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.